Hello and welcome to the Weekly Outlook at XM.com. Next week will be a busy one with flash PMIs for July for the US, UK, and Euro area due out on Monday, as well as policy decisions from the Fed, ECB, and Bank of Japan. How will this data and these decisions affect the markets? I'm Maria Pashurdes, and joining me to discuss all this is Senior Investment Analyst Haralambos Bisuros. So Haralambos, let's start in the US, where we'll get the flash PMIs for July on Monday and the Fed's policy decision on Wednesday. At the Fed's last meeting, officials hit the pause button. What are we expecting this time, and what will it mean for the dollar?
Hello, Maria. Yes, officials paused last time, but the overall outcome of the meeting was hawkish. The dot plot pointed to two more quarter-point hikes, and Chair Powell pushed back on rate cut expectations. Investors were not convinced back then, but they began raising their implied rate path after Powell appeared more hawkish at a panel discussion organized by the ECB. However, all this was only until last week's inflation data, where both the headline and core CPI rates fell by more than expected. Now the market is convinced that the Fed will deliver only one more hike this year and proceed with several rate cuts throughout 2024. Yes, Monday's PMIs may somewhat affect market expectations, but in my opinion, the Fed is unlikely to close the door to future hikes, and I would expect Chair Powell to continue pushing against rate cut expectations. And why do I believe that? Because core inflation, although it is coming down fast, it remains at 4.8%, more than double the Fed's 2% objective. So it is too soon to assume that the job is done. The big question, though, maybe will the Fed appear hawkish enough to convince the markets that no rate cuts are needed for next year? In my opinion, for the dollar to strengthen notably and hold on to any decision-related gains, the Fed needs to appear more hawkish than previously and convince the market that yes, indeed, there will be no rate cuts in 2024.
Moving over to the Euro area now, we'll also get flash PMIs for July on Monday and the ECB decision on Thursday. Is a July hike a done deal, and what's the outlook for the euro?
Yes, I believe that a July hike is a done deal, and the market believes so too, because it is well telegraphed. So if this is the case, the attention will fall on signals about the ECB's future steps. Now, with several ECB policymakers arguing that a September hike is not set in stone, traders now believe that interest rates in the euro area will be cut next year to 25 basis points below current levels, despite still expecting two more hikes in 2023. That pricing may be affected by the preliminary PMI due out on Monday. And although a hike at this gathering seems a done deal, signs that Eurozone is losing more economic steam could prompt speculation of a softer language in the statement accompanying the decision. The big question, though, may be whether ECB President Christine Lagarde has also softened her stance, or whether she will appear in her hawkish suit again, dismissing the Eurozone's economic slowdown and prioritizing getting inflation in check. If Lagarde sticks to her guns, the euro is likely to gain and perhaps extend those gains on Friday if preliminary CPI data from Germany suggests that Eurozone's economic powerhouse experiences inflation stickier than previously thought.
Turning to Japan now, we'll get the Bank of Japan's decision on Friday. Do you think policymakers will act at this gathering, and what will their decision mean for the yen?
To be honest, I don't believe that they will act at this meeting, and the reason for that is fresh remarks by Governor Ueda, where he said that there is still some distance to achieve the 2% inflation objective, and also signaled determination for maintaining ultra-loose monetary policy for now. That said, even if the bank does not act, market participants may be interested in the new inflation projections as they may try to estimate the length of the distance Ueda is referring to. If those projections are revised notably higher, the yen may gain, even if there is no policy shift now, as investors will start speculating for a normalization step, perhaps at the next gathering. The opposite may be true if Ueda and his colleagues place more emphasis on maintaining current policy due to inflation being driven mainly by expensive imports rather than domestic demand.
And finally, is there anything else we should be on the lookout for next week?
Yes, there is. During the Asian session Wednesday, we get Australia's CPI data for the second quarter, while for the UK, the next week starts and ends on Monday with the preliminary PMIs. Following the larger than expected slowdown in UK inflation, investors may be eager to see the trends in prices charged by businesses during July. Further slowdown could result in further declines in the pound as traders start re-examining their ultra-hawkish Bank of England view. Now, finally, on the earnings front, we get the results from tech giants Alphabet, Microsoft, Meta, and Amazon.
Harlambos, thanks so much. And thanks for joining us at XM.com for this weekly outlook.